Good morning. You're watching The Market right here on 18 Hour with me, Aisha Faridi, Ajay Sharma, Avan Dabash in the studios. And a decent market yesterday, given all that's going around the globe, given the spike that you've seen already in the dollar index, we didn't do all that bad. Yes, we started off at session lows, struggled a little bit in the first half, and then finally lifted off over 100 points from the session lows. It was actually the Nifty Bank which pulled up quite smartly. The magic by HDFC Bank ever since it hit its 52-week low day before. That along with SBI and of course other key stocks like M&M as well participated in the markets and gave the index that leg up. PSUs, they continue to extend that recovery. A very shallow, deep correction lasted only one day and they're clearly back in four. Energy, of course, continues to be energizes once again, and yesterday was no different. What with the move coming in on a BPCL or for that matter ONGC, they continued to scale higher. So if you don't look at the index per se, a lot was happening under the umbrella.
In fact, sorry, bad throat. I was just telling you that look at the way first 10 gainers of the Nifty, you would see almost 6 of them are commodity names.
Yeah.
Energy, yes, but non-energy commodity also, like Coal India. And yesterday, since we've been discussing, HDFC Bank made 52-week low, but the 13,000 crore worth of buying which happened by 3 funds, the old school, very large funds. One was PPFAS, one was HDFC Bank and ICICI Bank. Since that data circulated in the market, people started getting some confidence about, okay, this is 52-week low, market is frothy, might as well take position here. And at least the feedback which I got, some smart guys in the market, a big HNI, $1 billion plus kind of names also started getting active, and probably that is the reason you're looking at. The biggest contribution in the Nifty yesterday was actually from HDFC Bank. Apart from that, energy we spoke about. Actually, M&M was a big breakout yesterday. The entire auto space was not participating. M&M, it was doing its own thing. Market got really excited about the EV lineup, getting hotter in the next few months. So it'll be interesting to see how because stock is not cheap at 1800. Yeah, it is expensive.
It's life highs.
It's life highs. Yeah. It is on the higher end. So there is some amount of re-rating kind of move after it's got crossed the 1500 mark, which is happening. But broader markets are also pretty active right now.
Yeah.
Go ahead.
Yeah, I was just talking about, the broader market, and that really is where you've been seeing a bit of a pullback as well coming in as the markets have been scaling up over the past 2 days. And banks in particular, given that that's clearly the talking point, looks like really, Ajay, they are getting that mojo back, because in terms of the contribution to the index, in terms of the delivery, and the fact that now you've got the Nifty Bank Index just about 5.2% away from record highs, but the PSU Bank Index is at a record high.
Actually, you know what? The PSU weight in the Bank Nifty has actually relatively improved. Once HDFC fell from 1800 to 1400, the weight also goes down from 14 odd percent. Now HDFC Bank's weight in the banking index has also gone down to 11-12%. So the difference between SBI and HDFC is very low. SBI is 10%, HDFC after the fall is 12%. That is the reason why SBI's moves is helping the Bank Nifty go higher. Of course, yesterday both SBI and HDFC, so 5% away. This entire the performance gap between Nifty, Bank Nifty is narrowing, and now HDFC Bank's rebound is helping the mojo back in Bank Nifty. Of course, smaller PSU banks are also doing their own thing, but they pale with comparison compared to the big moves SBI has shown in the last few days.
Yeah. It's important to highlight the FI data as well yesterday, right? Now, we don't know what the math is. We don't know what the names are still for that sizable Vedanta block deal, Ajay, which you only have been tracking.
Yes, and yesterday, this is a buy figure from the FI side. My sources tell me that, the 50% of our story at least came true, that promoters sold a big chunk, 1800, 1700 crore worth yesterday. I gather that another chunk may be sold in the coming week. And the mystery buyer behind this, because we don't know the name of the buyer, actually is Mr. Jain. And also our sources are now telling us there's a fund called Oppenheimer. Oppenheimer P-note actually could be the instrument Mr. Jain may have used. That's what we are picking up from the street. Not authentic yet, but 50% of the story that promoter were sellers directly in the 1800 crore block deal yesterday, which we told you that promoters are turning their mind to sell some stake. That has happened. But the second tranche, the word is, may happen much lower, between 255 and 260, and that is the reason that after the block deal as well, the stock came lower. So next week, watch out for Vedanta slightly on the lower side, around 260. If another block happens, you can put two and two together and understand what the promoters are trying to do.
Because you were picking up that a sizable 1,700 crore rupees is to be
is
offloaded
sizable
by the promoters. So there's clearly some balance in the kitty there. Let's talk about Kotak India strategy, and another brokerage coming up and saying that no, there is no fear on the street right now. In fact, it's greed, and they are saying that valuations definitely are toppish right now. They're saying stocks are overvalued, valued, some less, some more, and some bizarre as well. And that's the beauty of a bull market, right?
I was talking about it with Somit in the morning that we can say that valuations are expensive, but the data shows that only 50% of the time any market, US market, Indian markets actually remain in the fair zone. Rest of the 50, either they are overvalued or they are undervalued.
Yeah.
And market, it doesn't give you the way you like the market to be. You have to take the market the way it is actually. This is that market, you have to take it or leave it, but it is not getting you anything cheap for sure.
And just on a very notional note, we're talking about it being India's decade, India's century. Who's to say that these valuations are fair or not?
Absolutely.
We're talking about India being the next 10, 20 odd year long story.
Yeah.
So,
You are so right, Aisha, in saying that. I know I've looked at oil marketing companies, for example, just because that's the new the new love for the market beyond other PSUs. These guys have traded at 1 or 2 PE for decades.
Yeah.
And when that 1 or 2 PE became 3, 4, people are calling it expensive. Just imagine a company. Yesterday we were talking about ONGC. It is likely to make almost 80 to 90,000 crore of profit in 15 months from here. What is the market cap? 3.5 lakh. 3.5 times India's largest upstream company. If the policy and regulators are appearing to be getting active around that, come and crack the whip. Efficiencies have to come. You have to increase the volumes. The way efficiencies have increased so many other PSUs. Who's to say this 3 times cannot go to 6 times? So I think we should not have the baggage of the past only, past business model. Look at it in fresh light.
All of the PSUs, in fact,
all of
across
them.
the board.
The idea is to look at them in fresh light and what the new reality is around efficiency.
And I don't think when it comes to India and the way the economy is chugging along right now, any traditional metrics, even for the expensive names, actually stands true. But anyway, that's a discussion for later. Let me take it across to Vinny, find out what's happened in the global markets overnight and what the commentary is looking like. Vinny?
Good morning, and absolutely the first thing we'll talk about is because the UK GDP figures are showing that the economy has actually fallen into a bit of a technical recession. So we have commentary that has come in from BOE's Megan, who's highlighting that the monetary policy will need to remain restrictive for some time. Brexit and the pandemic have left the UK supply much weaker than in the US in the recent years as well. Other than that, furthermore, she's highlighting that all else is equal. This would mean that the inflationary pressures are greater in UK, but the demand is weaker too. So concerns coming in on that front in terms of the technical recession signs, which are indicators as well. Let's move on, talk about commentary that has come in from ECB's DCOS as well. He said that there is no rush for the ECB to actually start lowering the borrowing cost as well. The confidence that inflation will continue to slow and converge to that 2% target, yes, that's intact. But what makes sense is that the government council, he believes, has to think that the next movement is going to be in terms of the interest rate cut will be there in terms of the target, and the interest rate cut is something that they're keeping a close eye on that. Lastly, we have commentary also coming in from Norges Bank's Ida, who is highlighting that she's quite cautious and cautioned in terms of the easing of the monetary policy too soon could weaken the confidence in the central bank's ability to actually tackle inflation. And they're still keeping an eye out on that. She's warning against rushing into key rate cuts as well. So yes, everyone's highlighting that one does not need to, central banks do not need to rush into cutting interest rates as well. And lastly, Peter Schiff commentary coming in on gold, and he's saying that gold has moved back below the $2,000 per ounce mark, and now he believes that there'll be a lot of longs that will come in for gold as well, and suggests that the biggest mistake was made by investors who actually sold gold and to buy Bitcoin ETFs. So that is something that he's watching out for, continues to be bullish on gold as well.
Thanks very much, Vinny, for summing that up for us. In fact, let's also get in a snapshot of all of the F&O action then, and we've got Ansh standing by to walk us through those details. Morning, Ansh.
Morning. So let's start with Nifty first. As you can see in the chart as well, Nifty gave a decisive breakout from the 21,800 mark on Wednesday, and in the previous session it retested the same level from upside, indicating 21,800, which was acting as a strong resistance, has turned into a good support. But talking about futures and options, in index futures we are seeing open interest declining by over 3%, indicating short covering, which is a positive sign. Whereas on option front we are seeing active call buying at 22,000 mark, indicating option traders expecting Nifty to touch around this level. Whereas on downside, we are seeing put writing happening at 21,900, which is very close to current market price, and 21,700, indicating strong support around these two levels. Let's also talk about Nifty Bank. If you see the chart, Nifty Bank gave a slight breakout from that key resistance of 46,000, not a decisive breakout like Nifty gave. Also, we may see some strong resistance around 50 DMA, which is around 46,800 mark on upside. Let's also talk about futures and options. In index futures, if you'll see, we are seeing option interest declining by over 9%, indicating very strong short covering happening here. Whereas on option front, we are seeing call buying happening at 47,000, indicating option traders expecting index to touch around this level. Whereas on downside, very strong put writing happening at 46,000 level, indicating good support base forming around this level. Let's also see what FIs did in previous session. In index futures, we are seeing them covering long by 2,100 contract, but they also covered shorts by 7,400 contracts. So net to net, we are seeing a net addition of around 5,400 contracts on upside, due to which the total long has inched higher from 36% to 36.5%, indicating continuation of their bullish stance.
Okay, thanks very much, Ansh, for giving us that roundup on all the F&O action. Let's bring on board our chartists. We've got Vaishali Parekh joining in and Naresh Mirani as always. Morning, I'm going to start off with you, Vaishali, and give us a sense as to what you're making of the overall setup, given the fact that we have seen PSUs clearly extending their recovery.
Very good morning to all of you. Yes, market has given a good bounce back and the PSU are back in action. So yesterday we saw that there is good focus coming in all the small banks, that is UCO Bank, Central Bank, also stocks like NBCC and NHPC. So yes, the view gets positive once again in the mid-cap category and PSUs per se.
Naresh, how are you charting out the index then, given the fact that we've got support coming in from a mix of stocks, a large part, a lot of those PSUs, commodity driven, M&M for instance was on a tear in trade yesterday, and we were at 21,900.
So yesterday the most interesting part was we saw recovery in HDFC Bank. Now the reason we have to look at HDFC Bank is it continues to be 10-12% weight on the Nifty, 25-30% on the Bank Nifty. And if that starts making a recovery, it gives a fillip to the index as well. So if we see a bounce back in HDFC Bank towards 1450, 1480, that creates the momentum needed to cross 22,100. The only concerning factor is the day HDFC Bank moves up, you see ICICI Bank or an Axis Bank take a step back. At the same time, you have a breakout in SBI which continues. It's just that the weight is lower in the index as well as in the Bank Nifty. So overall, HDFC Bank moving up, Reliance continuing to hold on. So the structure gets positive for the large caps as well. So ideally, would expect 22,100 to break out in such a scenario. And we test 22,500. So for now, 21,700 becomes the new base going forward.
Okay, let's talk stocks. And Naresh, what's on your list?
So it would be two banks, one the largest one and one the mid-cap, small-cap. First is the buy on HDFC Bank. We saw a new 52-week low being hit on the stock at the same time when other stocks are making 52-week highs. Pre-COVID, the stock used to trade at 1,300. And post-merger as well as pre-merger, 1,300 has been a strong support. On the upside, 1,700, 1,750. So the stock has gone through a 4-year period of almost zero return. And in that scenario, the risk reward looks interesting at current levels for at least a bounce. Yesterday's recovery could be the first indication of a reversal. So this gives us a good risk reward trade. A stop loss at 1395, target price of 1480. Second is a buy on IDFC First Bank, which had seen a huge rally from 30 levels to almost 100. We saw QIP and various price volume action happening at higher levels and then corrected 20%. So at these levels, looks like a reversal candle yesterday. A small stop loss at 79, a bounce back target of 88.
Right. Vaishali, what about your stocks?
So yes, we are seeing a lot of movement coming in the front line. So of course, now today, along with banking sector, I think IT sector also should do well. But I have chosen two stocks from the mid cap category, and one, as I mentioned, I like Central Bank. So Central Bank is my buy with 67, the current market price being Central 67, and stop loss would be around 62. Target will be around 80. The other one I'm looking at is HFCL. HFCL again getting back into momentum, good uptrend. I would say the stop loss comes at 94. Look for a target of 115.
Okay, Anisha is as well here to flag off all the stocks which are in news this Friday morning. And Anisha, it's PSUs all over, be it OMCs or banks.
Clearly, that's the flavor of the market right now, and that's what brokerages are talking about as well. So whether it's Bank of America on PSU banks or Jefferies on OMC, they're quite bullish and they're upgrading these sectors, saying that the market clearly is telling you that there's more room to this rally. Let me start with what Bank of America has to say on public sector banks. They say that they're well placed to balance the cyclical and structural drivers which are there. The Q3 has been a bit of a beat, and that's the reason they've gone ahead and upgraded SBI to a neutral. They've also upgraded Bank of India to a buy, and they, as it is, have buy ratings on the likes of Union Bank, Canara Bank, as well as Bank of India. Now, for SBI, they've upgraded it to a neutral. They say that they find the relative valuations now very comfortable, given the underperformance that the bank has reported in the last few months. The asset quality is something which is supportive. The overall cycle is supportive for State Bank of India, and that's why they expect that the credit cost is expected to remain low in the near term. And this is one of those banks which has actually led the way when it comes to the public sector banks in the digital infrastructure, and that's now bearing fruit for the bank as well. So the price target is driven by the lower cost of equity, EPS upgrade on account of the lower credit costs, as well as the operating cost is expected to remain benign. On Bank of India, they say that they expect the bank to deliver 1% return on asset in FY25 itself, which is earlier than the management guidance. And the bank's focus on digital is again something which will help to drive the retail and SME portion going forward. So clearly a thumbs up coming in for these banks, and SBI, of course, we have seen in the last couple of weeks has already run up, and of course you have Bank of America believing more legs to the rally now.
Anisha, this is the second time or third time in the last 15 days that we are looking at some upgrades on OMCs.
This one is on banks specifically, and banks also, one of the upgrades had come last time, I think in a couple of weeks on SBI, a few weeks again. And OMCs, yes, we have seen a slew of upgrades on OMC in the last month or so. And today again, of course, Jefferies has actually come out with a note. BPCL is something they like, and they say risk reward is something which is very favorable on BPCL. So even if you take out other factors, BPCL remains their top picks. What they like about the sector is that government has not done any intervention. So that makes you believe that, you know, the prices are completely agnostic of these policy regulations and completely driven by demand supply. So that's something that they like. The oil prices have been range bound as well. That's been supporting for the refining margins for all of these companies. And even the Red Sea disruptions is something which has been positive in the sense of the refining margins. The marketing losses which we have seen in the diesel business of late is only transitory in nature as per them. So that's something also which is supportive. And as far as the multiples are concerned, they believe that then if you compare it with the peak cycles, there's still room on the upside. So while yes, you might consider from the lows these stocks have nearly doubled or tripled, they are saying that if you compare with the peak multiples, there's still some room on the upside, and it's a blue sky scenario for some of these counters. BPCL, they are upgraded to a buy because it trades at the steepest discount to its past peak. So these are some of the factors to watch out for. Of course, they've increased the target price on BPCL all the way to 890. HPCL stands at 550, and IOCL is a hold right now with a target of 215.
Yep, that's pretty interesting, something that we were discussing as well earlier. Thanks, Anisha, for that. Jeffrey's talking about how the peak cycle multiples leave room for further upside. And in fact, it seems like the Modi guarantee is acting as a major fillip for this entire PSU basket. The stocks are back on track. They're scaling meteoric highs across the board, be it banking, rail, power or infra. Let's listen in to what some of the top market voices have been talking about with respect to change in governance structures of some of these companies.
We have been talking about value as a thesis, and obviously PSU qualify as a value thesis right from September 2021. So it will not be, we were relatively, as compared to somebody is looking at the top, we are very early in identifying that inflection point, and I've been very bullish for more than 2 years now in this space. But we remain very constructive. If you look at the larger picture, we are looking for the PSUs. Okay, neither we get too complacent about the move which we happened very recently, nor we get too tense about what happened in last 2 or 3 trading sessions.
Between the PSU. So we've been invested, in PSU stocks, especially PSU banks. We own BHL, we own HAL. So I think we participate in, and we really don't look at anything as a PSU or non-PSU. We look at wherever there's a transformation happening, especially, we take care and we like where there's a governance is in place, a business model is in place and valuations are in place. Our biggest call has been that this bridging of the gap will create biggest value, and still we don't find there's a huge still there's a lot of value on the table. If you look at in more,
I think there is a significant amount of froth in the public sector enterprise system. There might be some leaders which are still reasonably priced, but I think by and large it is my opinion that the public sector enterprise as a whole is quite expensive as a stock universe.
Is also joining the conversation. Good morning, Sanjeev. Sanjeev, I was thinking of you this morning when reading a brokerage note, which actually says that the market is extremely expensive. There is only greed on the street, no signs of fear. You are someone who always say that you got to take the market the way it is, not the way you would like it to be. Otherwise, you'll be sitting right on the side. How are you feeling looking at the market right now? Thank God it's Friday, but went to 21,200, came back to almost 22,000.
Yeah, good morning. Ajay, greed and fear is in the eyes of the beholder. Nobody can believe that HP, BP, IOC have more than doubled and keep on rising. And State Bank is at 760. So the fence sitters will say this is an expensive market. We want a correction. We will get it. If corrections came because you want to buy, then they will not come. Till those guys who are out of the market will not get sucked in, the market may not be able to give a meaningful correction. As it is, we've seen that the correction lasts for some time. But look at the change of ownership. HDFC Bank lagged for 1 month and Reliance made up that differential. The other stocks which are outperformer have been IT and pharma quietly hitting new highs. So I still think stock specific you can see upside. But to classify that the market is cheap is also will not be in the right mode. However, I reiterate that this is a global liquidity rally. And if you keep watching the Fed inflation numbers, the macros, and become an economist, you will not make money. So stay invested, look for good stocks which are giving you the value, and keep staying in them, because there is no perfect mantra. We will see a correction when it comes, and we will wait for that. But right now, all the microeconomic data seem to be in a very, very sweet spot. Look at how PSUs have performed. The proof of the pudding, Ajay, is only for those who are holding it. And people who shunned PSUs and said stay away, they are now talking for a big correction and overvaluation in PSUs, which is normal.
Which part of the PSU is your favorite right now, Sanjeev? You've been riding PSUs in parts for some time now. But there's such a huge list of categories, right? Banks, railways, power, this, that. Which part has got the most juice right now, in your view? Banks?
So, three specific stocks. I think ONGC is one stock which has hardly been re-rated, and it is the most under-owned stock as far as ownership goes. If we are talking of energy, then ONGC has to be on your list, irrespective of 270 or 280 or 260. Second is again IOC. I am very, very optimistic on IOC. Again, I have been bullish on it from 95, 100, 110. At 180, you take your call, or 190. Concor and IRCTC are two more plays. And last but not least, Nalco. You can add a Hutco and a NBCC, which we own from much lower levels. And it is difficult to come out and see, Ajay, the disparity is that some of these stocks have been huge outperformers. To come and stick out to a stock which is up 3 times is very difficult. But the uncanny part is that REC, PFC are only got higher in the last 2 years. And if you miss the initial part of the rally, there is no harm in joining in. This goes back to Warren Buffett, who didn't understand technology and stayed away. But in 2016, when he understood Apple, he put big money after it. When he put big money, his 50 billion is up 5 times in the last 6 years. So it is like I said, the value lies in your estimates, in your eyes. You have to see where you can put your money. There are no free lunches now with stocks having rallied the way they are. We are seeing value in some other sector stocks in similar trends, and we would be more optimistic or bullish on those.
Which ones are those, Sanjeev? Which are those sectors, the kind of optimistic trends that you're seeing? Where's that?
So, good morning. Avan, if I can take the biggest wealth creator in the last 1 year, it has to be GQG Capital and Rajiv Jain. When he bought Adani, nobody was thinking of buying, and there was all the talk of debt overhang. Now his latest baby is Vedanta. I think Anil Agarwal has been under the cloud because of debt and merging some of his businesses in one. Now that may have been in parlance with his corporate strategy. But you cannot have cane, sisa goa, aluminium, zinc, bauxite, silver, copper, all of them put together. And to add to that, he has 4,790 megawatts of power. He also has bauxite with Balco. He also has Hindustan Zinc. 36% is the dividend yield in Vedanta. And now GQG is buying, say, $1 billion. Now, I'm not saying, do your legwork, but this stock should be 400. And if GQG Capital has the Midas touch, then his stocks don't double, they triple in 1 year. I am looking at something like 550, 560 coming in the next 1 year. And I can see that if Yes Bank is now 1 lakh crore, then at 99,000 crore, Vedanta has enough assets to be at least double the size. Also, their debt reduction is in stream. They are the third on the S&P index of ESG. And the biggest icing on the cake, mind you, will be this Tuticorin copper opening. It used to contribute 40% of India's copper needs. And the Supreme Court taking a big verdict, I think this stock can start to be re-rated from day one. As a disclosure, we have Vedanta in our portfolio. We are adding, and we think Vedanta can be the stock of this year.
Wow,
Aside from that, I am very, very optimistic on Devyani at 150. I think the food chain, the QSR has seen the worst behind it. At 150, put your money where your mouth is. That is one stock which can outperform. I was just in Calcutta 2 days back, and from my interaction from someone in Bandhan Bank, they said their account openings is now 3.3 crores. And yes, there has been cloud on some of the old uncollateralized loan, but that is all written down. There is no such thing. Now to manage 3.2, 3.3 crore accounts and growing at 15 lakh a month, there will be a little bit of discrepancies which any rating agency can come. But, if I said at sub 200, at a time when their interest spreads are at the best, I think Bandhan is one stock you should own in your portfolio and leave the next 2-3 quarters. This can be a doubler maybe in the next 1.5 years.
So you've been very interesting, Bandhan, one of the most unadmired banking stock. You see value in it. And also good to see that, Sanjeev, you're tracking your favorite channel's exclusive stories very closely, the Vedanta one. We broke the story yesterday. Part of it came true in the form of promoter entity sell name has come in, 1700 crore. But our sources say another tranche will happen next week, and the mystery buyer indeed is Mr. Jain. But no confirmations yet. That's the caveat. Let's take a quick check on the charts as well. Vaishali, Vedanta, is it heading to 260 first or 280 first?
Well, that is hard to tell because yesterday we saw a good bearish candle occurring. But so I think let's take it as 260 to 285 as the range. So 260 is the opportunity to buy the stock. 280, 285, wait for a breakout, and we are looking at the next trading target of 320. So Vedanta is definitely on our radar. It's a definitely a strong buy at 260 levels.
Okay, gotten some real, positive views coming in from Sanjeev on certain stocks and sectors. And are you smiling year to year with the way M&M panned out in yesterday's trade? Because Ajay was also observing that it's not a synchronized move within the entire auto basket. It's been some select commentary on M&M, and that's led to that stock up 6.5% yesterday. Your views?
Yes, Avan, I am smiling from cheek to cheek, and you should also, because 2 days back, when all the channels were talking of the 500-point debacle on Dow, the macro numbers, they become economists from being anchors. That's the time you should buy. And I bought the fear, and you saw what happened. Nalco was up 14%, State Bank 6%, and raring to go. And UPL also joined in the rally. M&M numbers were a beat by far. Now, you know that the tractor division has been underperforming, but the SUV market is roaring. So I think there was a much needed, consolidation in M&M, but that stock is headed higher. And like I pointed out 2 days back, HDFC has bottomed out for the year. Read my lips. You will not get this bang. Hear the language. The mortgage business has seen the highest growth in the last quarter. There has been equalization of the merger. And I think HDFC now becomes the best buy to be in your portfolio. Yes, it may underperform for a quarter or so because of the over ownership, and every dumb foreign portfolio investor and Indian mutual fund having most of his eggs there, they have let go of that. Now is the time to put your money where your mouth is. So M&M and HDFC Bank are two stocks which will power your way to create wealth. Slow but sure, but you are in pedigree names.
Okay, if there you have it, that's the view coming in on M&M, one of the stars in yesterday's trade. But moving on, the FTSE rebalancing is in focus. The announcement is expected today post-market hours. Let's find out all the changes that will come into effect, and that's going to be post 15th of March. Which stocks are going to see the highest inflows and volume action? Vinny is here to take us through the details. Morning, Vinny.
So in terms of the FTSE reject, that will be happening today post-market hours, that's 16th of Feb. The flows will start coming in the last 30 minutes of March of 15th is when we'll see the flows coming in. Now, the key stocks that we're keeping an eye out on in terms of most inflows that these stocks will see, HDFC Bank is topping the list. Then we do have Suzlon, KPIT Tech, Fortis as well as Phoenix Mills in terms of the most inflows that are expected to see there. In terms of HDFC Bank, the weightage is also up, as well as the flows that are expected is $656 million as well, and followed by the other stocks that I mentioned. Other than that, in terms of the top 5 companies that could see the most amount of volume action that could be happening would be RBNL, SJVN, Maharashtra Bank, Mazgaon Dock, as well as Kalyan Jewellers. So yes, that's the how we are expecting in terms of the flows as well as volume action to pan out in the FTSE reject, where we will be seeing this action announcement post market hours today, and finally the flows will be coming in on 15th of March.
Okay, thanks very much, Vinny, for giving us all of those details. Meantime, Sanjeev, wanted to also get in your thoughts then on the overall outlook when it comes to some of these liquor companies, given that we've got a latest note coming out from Macquarie this morning on United Spirits, and they believe that it's an underperform rating. The market share losses as well is something that's concerning. Your take?
Well, millennial drinking is up and going. Piccadilly Agro, which makes Indri, has been the biggest outperformer. United Spirits, I think, was a no-brainer at 550, 600 when we were in it. And, now they'll be discerning views on what changes are there. But look, Avan, the mix of alcohol as a beverage is changing with times. So in millennial drinking, I'm a teetotaler, but wine and other ingredients are making their way. Who thought Indri will be the biggest single malt selling, which is now, overtaking even large foreign names. So I continue to be bullish on United Spirits. Look, the simple thing is social gatherings, alcohol as a consumption is rising. Millennials are now preferring branded and better pay for what they consume. So I continue to think United Spirits will be a relative performer. The valuations may look stretched. They have 53% of the market share, and Diageo has been actually laughing his way since they picked up the steel because of Vijay Mallya's preference to not let go of Kingfisher and give up McDowell. So I think that was the game changer. They are here for a long period. 53% of the market share is with them, and it continues to be one of our portfolio picks.
Sanjeev, seems like liquor consumption could go down in Delhi. Looking that you're out of your bomber jacket, doesn't seem like it's as cold in Delhi anymore.
Well, a little bit of Calcutta rubbing in, and yes, Aisha, it has got slightly more tolerable. My throat is also better. And, we've had a superb winter, and this is the best part, February, March, April, where the temperatures are normal, and I think the extreme cold wave is now maybe past. So, like I said, the weather is past. The oncoming of HDFC is a history now. The regulators should wake up and see that they make a market-weighted index, not 36% by one bank, which distorts the total bank Nifty, and try and rectify that. And I think HDFC Bank will lead Bank Nifty now. It is going to be Bank Nifty which will outperform all the indices in the next few months.
That long wait is going to be over. As Sanjeev, I guess, was the case with Polycab as well yesterday, right? All that damage that the entire sector of wires and cables went through when there were all those ED searches, etc., going on around. A big breakout from Polycab yesterday. You think all that damage is behind us? And, for those who are looking at a fresh entry or looking at adding positions, can, pick up any of these names, either a Polycab, RR Cable, etc.?
So we have Finolex in our portfolio, and yesterday the buzz in Calcutta was to buy Polycab. I'm not advocating that, but they seem to suggest that the worst is behind. It was a routine check, and media and TRP ratings overdid it. The ED searches are normal. Arvind Kejriwal has been summoned 7 times. He refuses to go. So I think innocent corporates will be bystanders to what the these regular searches are. And it is difficult to comment on what the thing, but the underlying business remains that Polycab is a very, very sound, on a very sound footing as a brand goes. And I think that one hiccup may have been a buying opportunity unless we get more disclosures from the company, which actually has said that it was just part and parcel of a routine search.
In fact, Polycab rebound above the 200-day moving average as well yesterday. So that is something to watch out for. Sandeep Sabharwal is also joining us now on the show. Sandeep, good morning. Sandeep, what are your take on Max and Axis Bank? Yesterday, there was a section of the market which was busy shorting the duo, on reports that there could be some issue in the transaction, which they clarified to last evening. If on this particular matter, the stocks come under pressure, would you be interested in any of them? Would you look at any of them favorably, Axis or Max?
Axis is something which we hold. It's been underperforming in the near term along with the rest of the private sector banking pack. And if there is a correction in that, I think it becomes more, I would say, attractive. I don't think much should come out of these, whatever allegations are floating around, because there's no personal benefit to be made by Axis Bank. There are no promoters as such. It's an institutional owned bank. So I'm not sure where all of this is coming out from. So people who want to be cautious, they can wait out and see what the courts say, but I don't think it should be too serious.
Before we let you go, Sanjeev, any interesting idea for rest of the day, apart from what you already told us?
Well, I've been advocating for you to buy Dhanlakshmi Bank. And I continue to think it's one of the most attractive small mid-cap banks at 1100 crore market cap, which is in agri, which is in gold, which is in MSME, and which has no promoter as visible more than 2% stake. So Dhanlakshmi Bank is one thing which I'm very positive. India Bull Real Estate, I reiterate, you cannot get land bank values at market cap, which is abysmal compared to where land banks are. The merger with Embassy is just a matter of time. I think this stock can be re-rated. As a disclosure, both these stocks are in my personal portfolio and in our client portfolios. Ajay.
Okay, Sanjeev, always good to have you on the show. Dhanlakshmi Bank, Indiabulls Real Estate, look out for both those names. And Sandeep, clearly seems like that banks ka time finally has come. Looking at HDFC Bank finally as well moving.
Yeah, so I think the management also has been talking to people and trying to assuage fears and all. And I think they're started to get some positive coverage after a lot of negative coverage. So there's a high probability that we could see a bounce back. But I think the bounce back will be shallow till the point of time some actual change in fundamentals plays out. But uh, the probability that it could outperform in the near term has increased.
Increased, right? Okay, that's
Increased,
interesting.
increased.
Oh, that's interesting. So, risk reward meter actually tilting towards reward more. In fact, yesterday volume was pretty decent. Yesterday's buying was backed by volume. Nuresh, how are the volumes? Can you just help us read that? Yesterday's rebound on HDFC Bank, and if it was indeed backed by good volumes, where could it take the price to?
So in terms of cash volumes, it was still okay. We actually saw a larger volume day before, which is where it took a knock and we saw recovery in the day itself. Now, what is interesting is, say, if we go back a few weeks back, we made a low around 1380. And then yesterday we broke the lows. We did not see a follow-up sell action. We actually saw a recovery in the last two sessions from the lows. So this is a classical positive divergence in terms of a technical reaction. In this case, we would expect a retest of the recent highs of closer to 1480. So that's the first take. And if it can cross 1480, that's an indication a short-term bottom is in place and we could surprise on the upside. So as of now, we take it step by step. We've seen the largest volume in the last 1 month. So looks like a bottoming out case. And mind you, if you go back a little more, the stock has done nothing for last 4 years. In 2020 start, the stock used to be 1300. In 2022, it used to be 1300. And 1300 to 1400 where it has been. So it's been the lowest band for the last 4 years. So at the lower end of the zone, don't expect a larger correction from there, or ideally it could surprise on the upside. So at these levels, the risk reward is in favor.
Sandeep, quite a few turnaround stories, and correct me if I'm wrong here. Vedanta now seems like they're cleaning up their act. We're picking up that GQG could be a buyer in the block that happened yesterday, and some more to go, as Ajay's sources are indicating. Yes Bank as well seems to be quite the cleanup story. Sanjeev Bhasin was just talking about as to how India Bulls Real Estate could be the next turnaround bet. Any of these names that you're looking at actively?
It's very tough to invest in these turnaround brands because the turnaround stocks sort of because see fundamentally Vedanta has big issues related to the debt. Now, when debt is an issue and interest rates are elevated and refinancing risks present themselves, then like companies like Vedanta or, for example, companies like UPL become very tough to predict because the debt issue can really blow out even if fundamentally it's stabilized. So I think that's the big issue I see with such kind of turnaround stories.
UPL
India
has been
Bulls,
reducing
I
their
haven't
debt.
looked at.
UPL in particular has been reducing their debt every quarter, but of course the cycle, the phase and the agrochemical is really weighing down on them. Vaishali, I want to come to you on Phoenix Mills. Yesterday, last hour of trade, we were discussing it, which appeared like a big breakout to our panelists. Look at Phoenix Mill, 6.5% ended at day's high. What has come around is this particular stock will be the biggest beneficiary of FTSE rebalancing and is likely to see among the 5 names which will be seeing most inflows. How does the closing look like to you, Vaishali? Phoenix Mills and the next levels to watch out for?
Well, so I think it is in a very smooth uptrend, and we have seen that it's a number of times it's been taking support at the moving averages and bouncing back. So, seeing yesterday's candle and the volume pickup that we are witnessing, I think this stock is ready to retest the previous high of 2835. And if the momentum continues, in all likelihood, this can go to 2900 levels also. So, it definitely looks very positive, keeping yesterday's low as stop loss.
Okay, meantime, Sandeep, just curious to get in your take on the entire infrastructure basket, because if you look at the kind of data that we've seen in the last 1 month, a lot of these stocks have been at the forefront. What's your outlook on some of the names within the space, and IRB and NBCC, etc., or your preference? I know you track NCC quite closely.
So I think on the infrastructure side now, what's happened is there are companies which have built up the order book. There are companies where order books are running out, and there are segments you need to choose. For example, the road segment order awards have been very muted this year. almost one third of the target. So I think companies focused on that segment, I think they have issues related to growth, which could come up for the next 1.5 years. But many other companies which are into the construction infrastructure space and have decent order book, for example, NCC, I think their results were very strong. The debt levels are under control. So the huge re-rating has happened. So I think from here on, it'll be more a earnings growth kind of story, 15-20% return stock. It should still be there given the order book of 60,000 crores, which is nearly 3 times of what the turnover would be. The other stocks on in these segments, capital good infra side, which we hold, one is VA Tech Webag. Again, the numbers were very strong. Outlook continues to be strong. And then the water segment and valuations still are cheap relative to fundamentals. For example, like I think it trades around 12-13 times next year earnings, 13 times next year earnings. So I think these two we own. Then we own Ahluwalia Contracts, where again the numbers are very strong. Again, they built up the order book in the prior to the election so that their implementation is not impacted, and the results were, I think, much above expectations. So I think these stocks should do well again going forward.
I had a quick follow-up with you on that one, Sandeep. VA Tech Vaba, we've been observing it's one of its kind company operating in an area where, it's very difficult to operate in not only domestically but globally. Why isn't the market giving it due valuation then? Is there a certain issues there which market would like to be resolved? What exactly is the reason, or understanding of the business model, or what else?
So the issues are that when a company goes through a tough cycle and it went into some problems in the past, so many people who invested in this company possibly looked at it and were disappointed by it. So then the confidence to come back takes time. So in the earlier cycle, so for example, there's one company which has not crossed its previous peak, which it hit, I think, 10 years back or something. If you put the long-term chart, you'll see it. I guess earlier peak was 950 odd. Then it used to do a lot of projects for the state governments. Its money got stuck. It had to take huge write-offs, etc. The interest cost ballooned. And now those things have got resolved. Now they focus on multilaterally funded projects. They are focused on cash flow. So from being hugely under debt, they have become debt-free and actually cash positive. So I think it takes time for the confidence to return. The stock's done well. It's not that the stock's not done well, but still valuations are much below historical valuation. It used to trade at 45-50 times P. It just trades at 13 odd times forward P. So my guess is both earnings growth and re-rating will happen for the company over the next couple of years.
Right. Okay, quite a bit of conviction there. VA Tech Vabag, and Sandeep has been holding that for a while. Sandeep, the other space, of course, which has shot up is the entire PSU energy pack, right? I mean, be it the OMCs, be it ONGC for that. And this amidst news flow that, crude has now jumped back to $83 to a barrel. There's always that windfall tax adjustment as well. And now we understand that, the windfall tax on diesel is going to be raised by another ₹1.50 litre. You've not traditionally been a fan of this pocket, but do you see value here now?
Not really, Aisha, because it runs on the whims and fancies of the government, sort of. So the government decided that they will not reduce fuel prices irrespective of where the crude goes, and that has boosted profitability of these companies. Tomorrow, prior to election, the government decides that we need to create some feel-good petrol, diesel prices are slashed 5-7 rupees. The entire profitability paradigm goes into so it's very tough to analyze these companies. What people are reading into, and which might be right also, that the government is now focused on these companies being run efficiently. They should be profitable. Indiscriminate disinvestments will not happen. So I think that's the theory going around. But then these companies are the same, what they were. It's just that right now they are having windfall profits. Whether they'll sustain or not, I don't know.
Still not convinced about OMCs for sure. But Gujarat Gas, that's going to be one in focus. It saw muted volume growth in Morbi gas in the third quarter. Management has attributed this performance to a disruption to the export market amid the Red Sea crisis. Samit is here with more details on what the commentary and the numbers were in Q3.
Well, if you see why Gujarat Gas would be important to track today in trade is because when the company's earnings had come out, despite a sharp miss in the earnings, the stock did not fall, and that was one of the reasons behind that was because a street was expecting in the conference call the company would give a good outlook when it comes to the Morbi volumes, and that has actually not come through because management has clearly indicated that the Morbi volumes currently stand at around 3.65 MMSMD as against the propane volumes of around 5 MMSMD. Now, this is despite the fact that gas prices and that LNG prices had seen a sharp decline and propane prices had increased. Now, despite this reason, the gas volumes in the Morbi region have actually not increased. Now, this clearly shows that the company is seeing growth challenges when it comes to their industrial segment, and now Gujarat Gas from a price leader has now become a price taker in the Morbi region. Now, going forward, propane prices are expected to further fall because of the seasonally summer season that we are going to see, and because of this will limit the room for further volume growth when it comes to Gujarat Gas going forward. The management also said that in the Morbi region they are seeing some Red Sea issues, because of which the capacity utilization of the Morbi region has come down to around 75%. Hence also the volume offtake is on the lower side. Now, when it comes to the non-Morbi industrial volumes, they are also lower at around 2 MMSMD as against its to a peak of around 2.4 MMSMD that we had seen 2 years back, and this is despite company exploring into newer areas like Thane and rural Ahmedabad also. Now, going forward, the management has maintained its EBITDA guidance of around 4.5 to 5.5 per SCM, and they have said that they will try to make a balance between when it comes to margins and volumes going forward. Now, CNG growth is one segment where the management is bullish, and they are expecting a growth of around 15 to 20%, and they are saying that they will open up around 200 new CNG stations over the next 2 years, which is nearly 25% of their new capacity, and that is the reason why they are expecting the overall volumes to grow around 8 to 10%, which will be led by CNG growth, which is expected at around 15 to 20%. So keep an eye out for Gujarat Gas in trade today.
Okay, thanks very much. We'll certainly be watching out for this stock, and in just a few minutes you'll have the pre-open rates as well that will hit the screens. But some of the other stocks as well that we'll be tracking then in today's trading session includes also of course, we'll be looking at Vedanta very closely to see whether or not there's going to be any more block deals or whether or not we have any more details emerging with respect to the buyers. You've also got something like Newgen Software, which has entered into an agreement with a consulting firm. We'll be watching out for that too. But in the meantime, wanted to get in your take then, Sandeep, as to how you're looking at the entire consumption space. What is it that's catching your eye within the entire mid-cap consumption pocket, given the fact that the concerns of rural slowdown seem to be imminent?
Yes, I think consumption is one space which is under-owned, where companies have not done well, and with now the predictions of El Nino ending and La Nina coming back, inflation being under control, I think the rural recovery along with urban should restart. I think many of the beaten down names should be considered. So, for example, I think Dabur at current valuations is pretty reasonably placed on the consumer non-durable side. On the durable side, yesterday afternoon, we were discussing about a company which we recently added called V-Guard Industries, which is on the durable side, where last 2 quarters they have shown recovery. They had acquired a company called Sunflame, where the turnaround seems to be proceeding quite well. And they seem to be quite upbeat on the outlook going forward. So I think this is one company which should do well. And Voltas is something which I've talked of in the past, but then it's run up to a 52-week high. So at these valuations, I don't think it's attractive for new entry at this stage.
The big dhamaka from yesterday, sure enough, was M&M, and eventually settled with a 7% uptick on the futures alone. The cash levels for M&M as well, quite a bit of traction there. The stock is already at its life high. It's above its key technical parameters as well, and a big intraday breakout. Sandeep, while the tractor slowdown continues and the M&M management as well was categorical in pointing that out, but it's, I guess, the EV pipeline which the street is excited about. What next in store for M&M from an investor perspective?
I think M&M is one company which has always been underappreciated by the analysts in general and investors. It's not very well owned if you see portfolios of PMSs, mutual funds, etc. But the company is delivered strongly on new product innovation, delivery, new products, models becoming successful, etc. I think it will become a serious player on the EV ecosystem also. Even with the slowdown in the tractor segment, the result delivery has been very strong. And even at a 52-week high, it trades at, I think, mid-teen valuations. So my guess is that there is valuation comfort, and tractor sales will eventually recover going forward, I think, after a few months. And so then both cylinders could fire. So I would be positively inclined after stock reaches a 52-week high, whether you should buy at the same price, that price, or wait for a correction or not. That's anyone's call. But directionally, I would think that the stock still should have upside.
You've been eyeing Maruti of late. It's been your buy call. Owing to M&M's move, has things changed?
So, Mahindra and Mahindra was a favorite back in the time when it broke out about multiple times about 1,000 levels, then 1,400, and now it is at 1,700. Maruti is at a very similar stage. Like recently, when we were discussing Hero MotoCorp at 3,000 when it broke out, we have a very similar structure. So, if you go back to the charts of Hero MotoCorp, the stock did not cross 3,000 for almost 2 years. It had not crossed 3,600 from 2017-18. And when it did so, the stock is at 4,800. Maruti is a very similar chart wherein the stock was last at 10,000 back in 2018 a couple of times, then in 2022, then in 2023. And then we've finally broken out above those levels, did a retest also. So it's not just a breakout. The retest is also done. Consolidation is also done. So the trend has started. And we've seen when such trends start in auto names over the last 2 years, we've been surprised on the extent of the rally. You look at a Bajaj Auto, 4,000, 4,500, buyback, multiple things happened. And the stock was a very slow mover. And today the stock sits at 8,000. So Maruti is a very similar chart. So from here on, all one wants to do is ride onto the trend and not look at what could be the upside target. So for now, the view is Maruti is the best bet in terms of risk reward.
Right. Okay. Let me also take it across to Snehi and find out what Morgan Stanley has to say about M&M after it zoomed past yesterday. Snehi?
Well, yes, a very bullish note coming in from Morgan Stanley for M&M. Now, what's key to remember is that M&M has one of the cheapest four-wheelers with a major domestic exposure. So on the back of this, they've come out with a note and they've maintained an overweight rating and they've hiked the target price to 1,952 per share. They're saying that the company M&M, it looks attractive compared to peers, and they believe that M&M can be the fastest growing PV play, which is the private vehicle play in 2025. They're saying that this claim of theirs can be supported by two factors: the order book and the demand that they're seeing going ahead. And they're also saying that the two product action that will be seen in the first half of FY25, that's the Thar 5 door and the XUV 300 mid-cycle update. This will do well for the stock going ahead as well. And they're saying that the capacity ramp-up support will also aid growth in FY25. They're also assuming a 13% growth when it comes to this factor. When we talk about the tractor division particularly and their outlook on that, they're saying that rate of change in this division will be key to track, and they're assuming a 10% YOY decline for the Q4. And when we look at the full year FY24, they're expecting this segment to decline by 6% on a year-on-year basis. They're saying that the rate of decline for tractors looks like it will narrow going into FY25, so that's positive commentary coming in. They're saying that this will happen on the back of stable monsoon outlook as well as gradual rural rebound as well. The key upsides that Morgan Stanley is noting for the stock is that the company has guided mid to high teens UV guidance, and in the past they have met all their guidances, so we'll be watching out for that. And they're saying that the partnership with Volkswagen for its electric vehicle segment will be a key factor to watch out for as well. The key downsides that Morgan Stanley is pointing out is Tesla's entry into India that could weigh on the stock, poor monsoons and rationalization of hybrid tax or other factors that could act as headwinds, and competitive launches by players and chip supply issues. These could also weigh on M&M going ahead, but these are all potential threats, and we'll only see how these pan out going in the future. So, well, a rather bullish note coming in from Morgan Stanley on M&M.
Okay, Snehi, we'll leave it at that. That's M&M. Let's see what the stock does and whether after that big breakout on the stock, it sees any follow through come by. The pre-open rates already seem to be suggesting so. But let's get some mid-cap strategies as well going. Vaishali, what's on your mid-cap list?
I would be going for PNB because it's given a breakout yesterday, and I would be looking at a target of 134 to 140 to start with, and my stop loss would be 126.
Right. Naresh, what about your mid-cap strategies?
So that would be a buy on Aegis Logistics with a stop loss at 395 and a target price of 500. The stock has given a big cup and handle breakout. The stock had made a top around 390 odd levels in 2021, corrected down to almost 190 levels, then made a recovery to 390 in 2023, and then again consolidated every time it came to 390, 400 levels. In the last few sessions, it's given a breakout, one of the highest volumes in the last 2-3 months. So looks like a setup which could continue towards 500 and maybe even higher in the medium term.
Okay, there you have it. Those are some of the top mid-cap recommendations from our charters. Let's move on then. We've got Khabar on D Street. Indus Towers is in the spotlight. But what's the buzz? Let's find out. Vinny joins in with the latest. Vinny.
Good morning, and absolutely talking about the telecom shares and Indus Towers specifically as well. What we are understanding is there is a lot of interest that is coming in on these telecom shares. There's buying that will be triggered in the telecom shares as well. Now, Bharti Airtel, Indus Towers, they are on the radar of a lot of important accounts and pro accounts that we could say. 3 major broking houses seems like they've started buying into Indus Towers is what we are understanding, and even technically when you're looking at Indus Towers as well, seems like it's creating a bit of a breakout formation, as well as there's a lot of fresh longs that is seen in the future front as well. So a lot of interest that is building in around these telecom shares, specifically Indus Towers as well. 3 broking houses already are looking and starting to buy Indus Towers, and that's the main reason we're keeping Indus Towers on the radar today as well.
Okay, Indus Towers, that's the buzz coming in on the stock. Vinny, thanks for those details. But let's tell you what else is happening outside the world of equity markets. And in a landmark move, Greek Parliament has passed a bill allowing same-sex civil marriage. Couples will now also be able to adopt children. Greece is the first Orthodox Christian country to legalize same-sex marriages. And back home, no breakthrough yet again in the third round of talks between farmers and the centre. The talks yesterday lasted for over 5 hours, and the next meeting is scheduled for Sunday evening. Punjab Chief Minister Bhagwant Mann was also present at yesterday's meeting.
Meantime, the farmer unions, including the Samyukt Kisan Morcha, have called for a Gramin Bharat Bandh till 4 p.m. today. All agricultural work is suspended during these hours. Noida has also imposed Section 144 in the city. Commuters in Delhi NCR are advised to take metros amid the likelihood of traffic snarls. And meantime, 11 people have been killed in a massive fire that broke out at the main market in Alipur area of the national capital. The incident happened last evening, where at least 11 people lost their lives. Several others have been left injured after a blast at a plant factory. Let's take stock of what the index calls are this morning. What is it that our chartists are advocating? And it's a unanimous hold call on the Nifty index. That's what our chartists have to say. And when it comes to the Nifty Bank, Yes, that's a consensus call on the Nifty index and on the Nifty Bank. It's a hold call from both Vaishali as well as Naresh.
Getting set for the market open. One of the losers yesterday was also AB Fashion. Let's revisit what that stock is up to. Although CLSA maintains its outperform with a target price of 266, but the numbers definitely were weak. And after that downtick yesterday, today it seems like it's going to be a little stable for this one. A lot of other stocks. Let's see what Vedanta is up to. What's that doing in trade? What Yes Bank is up to? And it seems that the Carlyle Group sold that near 1.5% of a block of the total 6.5% nearabouts that they have in the block deal in Yes Bank yesterday. Today, that stock holding up 1% as we speak right now. BL Kashyap, they bagged a 200 odd crore rupee order. Sudarshan Chemicals, wherein HDFC Mutual Funds has been a buyer and a sizable quantum at that, 2.5% of equity. There's Interglobe Aviation as well. The January market share has been above 60%. So that's going to be the other stock to look out for. And then, of course, Max Financial's Axis Bank stating that all approvals were taken for the Axis Max Life deal and, shunning away the allegations. Dilip Biltcon as well, one of their joint ventures has been declared as the lowest bidder for a dam project worth about over 400 crore rupees. That stock has also gapped up this morning, 3.5% higher as we speak right now. So that's pretty much it. And, Ajay, at the bottom of the screen, all about OMCs, HPBP, IOC.
Well, I think today there's another brokerage which has come up and upgraded the entire pack, and that is why good gains coming in over there. But I must say that if you've not participated in the OMC rally so far and you're wanting to at these levels as a fresh participant, then you should be a little careful. These are the names which have done very well in the last 1.5 months. So maybe on a pullback you may want to look at it. There's one stock I'd like to pull up, and that is Linde India. It's the gas company, the oxygen supplier. Stock is trading higher by, flat 5,600. Remember, 2 years back, there was a buyback or delisting which the company had attempted. But because Nippon and few other funds had very large stakes, it did not materialize. The negotiation between them and the promoters did not happen. Keep an eye on Linde India. This stock could be in focus. Some corporate development may be brewing out there. Vaishali, can you check the charts for Linde for us?
Yes, I think it's a very attractive buy because we've seen the long-term trend quite bullish, made a high of 675 and since then a long consolidation. And right now also it is just hovering around for a very long time at these levels. So I think this stock makes a good buy at these levels with 5,400 as support. And further conviction comes above for 5,850 to 5,900 levels. And this can go to 62, 63 as the near-term target.
All right. Meantime, Naresh, just wanted to reiterate and get in your view on what the outlook is when it comes to the Nifty Bank Index and in particular HDFC Bank.
So Nifty Bank, the view remains positive purely for the fact that you have HDFC Bank making a short-term bottom possibly. Yesterday was a confirmation of a possible positive divergence, and we could see at least a bounce back towards 1480 and then take it from there. And then you have ICICI Bank, which is not breaking down below the 980,000 mark, although the momentum is still not there. But if it catches momentum, you get into a strong rally on the Bank Nifty. So if you look at the Bank Nifty weights, you have 26% to be HDFC Bank and 24% to be ICICI Bank. So 50% of the weights come out of these two names itself. So even a SBI going up 10% does not make an impact as much as a 3% move on a HDFC Bank does. So overall, expecting this bounce back, the Bank Nifty could go and test even 47,000 also if this move continues.
Okay, that's the take coming in on the Nifty Bank. Just want to revisit what the big buzzers from yesterday are up to. Let's see what kind of a follow-through M&M has settled in at after that near 7% move that the stock saw and 7% actually intraday. That stock will just come up for you on your screens, about 1.5% higher, fresh life high. Now almost, raring to go for that 1800 level. HPCL as well is the other one after that 6% dash yesterday. Today too, it seems like there could be further follow-through coming in there. Remember, Emphasis as well was a big mover yesterday, saw a near 6% move. So let's bring up that stock too. I don't think we've got the first rates on that. NMDC, that was the big dhamaka number from yesterday, gapped up 5.5% and held on to that gap up move. NMDC as well is seeing further traction of about 0.5% in today's trading session. And this comes on the back of Nalco's numbers, which were the other big blowout numbers from day before. There was Polycab as well, which we were earlier highlighting, a breakout on that stock too. About a 5% dash is what it saw in trade. But yeah, that's pretty much the market construct, just raring to go. It's a decent handover from the globe, so shouldn't be a problematic start for us in any case. Let's see which way the tide actually turns for our markets this morning. While the start, of course, is going to be in the green for sure. And looking at the Asian screen, it seems like it's going to be a comfortable green day, hopefully. But that's pretty much it on the market construct. The tilt, of course, is clearly towards PSUs. And now some of the underperforming PSUs seem to be coming to the fore. And not just PSUs, actually, that can be said about the private names as well. Case in point being HDFC Bank. A very smart start, 22,000. That's an excellent headline number to start off trade with, although let's see whether it sustains at that slippery level or not. What is HDFC Bank up to? What is SBI up to? They have really been the pillars of late for the index. 0.5% higher for HDFC Bank. SBI as well starts off about at 764 thereabouts. I can see some follow through come in for M&M as well. So that's the other stock which is in focus this morning. What about the OMCs? HPBP, IOC, and then of course add an ONGC as well in there. They also have been chugging along very smartly. Green ticks coming in for HPCL right now. IOC as well holding up about 0.5%, though I can see a bit of a pause come in for ONGC. That's actually down by about 1.5%. That also could be a knee-jerk reaction considering the windfall tax on diesel has been upped to now 1.5 rupees. So ONGC, Reliance, both of those sort of may see a bit of negative impact. What's Vedanta doing? What's Yes Bank doing? Vedanta, of course, after that sizable block deal yesterday, so was the case with the Yes Bank as well. Dilip Buildcon has been in focus. I want to see what Max Financial's Axis Bank, especially after that clarity, is up to. And I think Axis Bank is in the red, just mildly so actually, because they issued a statement last evening saying all approvals were taken for the Axis Max Live deal, so shouldn't be problematic. Interglobe Aviation, the Jan market share has come in above 60%. Escorts Kubota has executed a long-term wage settlement agreement with Workers' Union for 3 years, 0.5% higher for that stock as well. BL Kashyap has seen an order win of about almost 200 odd rupees or so. And then of course SBI, BOI, given the Bank of America upgrades that are now trickling in, not so much SBI, but the smaller candidates. Look at Bank of India, a gap up move there, 3.5% higher, now touching or rearing to go that 150 odd level in trade. So that's pretty much it. I don't think the screen is giving you any reason to complain.
Well, clearly above the 22,000 mark is what we've opened at, and the advanced decline is 7:1. That's the kind of broader market breadth which you are looking at. Look at how after a good set of numbers, Jyoti CNC shot back yesterday, almost a big move coming in, and today as well 4.5% move coming in on that one. Coal India yesterday was a big contributor apart from OMCs. Today too, we are looking at almost 2% up move coming in Coal India. Anything else which catches your attention, Aman?
Well, just looking at the overall construct when it comes to the broader markets, and it's pretty much neck to neck, but yet again, Ajay, it's the small cap index that's showing you that slight degree of outperformance, almost 1% if you will. And names that stand out include a Rain Industries, for instance, and NBCC, Bharat Dynamics, very active. Hindustan Copper is a buzz. You've got Reddington as well as something like a Credit Access, Grameen. Those are stocks that are lighting up the screen. Very positive breadth as you highlighted. Let's find out Naresh's first trade as well. And Naresh, 22K